Martin Houston, great to talk to you.
Thank you.
You are known as something of a legend, I think, in the gas sector. What's been your career and how have you got eyes on different markets?
So I spent 32 years with BG Group, now a part of Shell. And in the early 90s, I was fortunate enough to be sent to Trinidad and Tobago, actually to do a domestic gas project, as it happened, and ended up being involved in the Atlantic LNG project. And that became my first taste of LNG, and it really stayed with me for the rest of my career. So even though I moved on to bigger and better things within the company, LNG was always at the core. And we were very successful in BG in building what then was a world-class portfolio business, the first LNG portfolio business, and a set of skills around that and an ability to trade and arbitrage LNG. And it became the model, in fact, for what is happening in the industry today at a slightly smaller scale.
As co-founder of Tellurian, you're now building a plant, you're in pipelines, you're in markets. Fascinated to know your view on gas prices in this region and supply and demand.
Well, gas prices, of course, are set by the markets and what buyer and seller are prepared to agree to. I mean, I think it's a true statement right now that we're seeing prices struck on a long-term basis somewhat lower than they were, let's say, 10 years ago. It's true that spot prices are at a very low level at the moment. But I think, there are many things that make up an LNG contract. It's not just price. If you're on an oil indexed contract, where's the starting point in the first place? So there are many things that can affect the headline price, as you would put it. Is the market slightly soft now? Probably.
So you see it in the short to medium term, prices probably heading up in our region?
I do. I mean, I think the world will become tight again, certainly in our view, in the early 2020s, in which case we'll see the softening become a hardening of prices, and buyers will react accordingly. But I mean, one thing is, very important to recognise: this market clears every single day. I mean, the amount of LNG produced is the amount of LNG bought and consumed, and a good thing for this sort of price excursion we're in at the moment is that low prices stimulate new demand. And I'm a huge bull on the industry, and I see demand growing almost inexorably in the LNG industry for all sorts of reasons, by the way. But I do see these short-term lower price points, if you like, driving new demand. And remember that today the spot price is some 30 or so cents below the coal price, depending on where you measure it, say Newcastle, which helps with the long-term goal, if you like. One of the long-term goals of this industry for its sustainability is to replace coal. And if we are able to compete head-to-head and move a little bit more coal out of the seriatim of hydrocarbons, so much the better.
So what do you make, coming into Australia this week, of more rumblings from the government side, perhaps about intervention, forcing a domestic gas reserve, moving its position on its security mechanism, perhaps?
Well, look, unfortunately, governments sometimes want to intervene. I mean, I'm minded to remind everybody of what Margaret Thatcher said about Britain's energy policy when she was Prime Minister. And she said very famously, "My energy policy is that I have no energy policy." In other words, the markets will decide. And, I'm a great market believer. The markets are capable of determining what the prices will be. And I think it's all very well for the government to talk about intervention and domestic supply reservation and taking gas out of export contracts and so on. But the price has to be the reason for price escalation is that we're actually, in many cases, particularly in the East, exploring for more expensive gas. The cheap gas, the associated gas, is all gone. we're into more expensive gas, and that, so the price of gas is to a large degree set by what it takes to get, extract it.
But do you think that given that we are the largest exporter in the world, that it is somewhat bizarre that unlike America, who manages to produce cheap gas, we cannot seem to deliver cheap gas to our manufacturers and our public?
So in America, markets work very, very efficiently. And if there's a small arbitrage between, this geography and that geography, somebody will build a pipe and somebody will put some intermediation between the two of them. In this country, that's proved to be more difficult. Now, I wouldn't say that America is the panacea, because we've got pockets of not in my backyard with respect to exploration, just as you have in Australia. I just think it's a little more profound here in terms of the no-go areas. And this sort of curiosity that states that don't allow exploration or fracking or whatever it is that they
are the ones that desperately need it.
Exactly. And so you have that sort of going on as well. But I think in America, you would have seen the gas in the north and the northwest find its way into the conurbations by now. There would have been some kind of debottlenecking of the system, or some new pipelines built, or interconnections. And I think the first sign of the market at work is the whole idea that you might be an importer of LNG, whether it's your own LNG, although I think cabotage rules might make that a little bit more difficult. But that's the market at work, and actually that's a good thing.
So what about our great trade war between Donald Trump and Xi Jinping in China? How does that impact, or could that impact, gas prices?
Well, look, there's no doubt that China represents one of the large gas markets for the future. I mean, it will overtake Japan as the number one LNG buyer at some point in the not too distant future. It will continue to buy large volumes of LNG. I think there are two elements to this. Trade war or no trade war, the industry will always end up arbitraging the short distance gas into China. So I think Australia, whether or not there's a trade war, will end up swapping its gas to be the supplier to China, whilst other diversions cover other contracts elsewhere. So I think that we should look to that in the future. I think that the trade war is a matter of opinion. I mean, my sense is that it's a short-run thing. I think it will resolve itself. I think we will see the trade balance, whatever that means, restored in some way. This sort of trade disruption isn't good for anybody in reality.
So coming back to Australia, do you see a lot of sovereign risk? Do you think the international players are getting more concerned about a rise in changes in Australia?
Look, I think that the buyers are long term, and I think they look at the sort of domestic gas issue as being a domestic matter. They have a contract. They have a contract with what have been very reliable sellers. I mean, the North West Shelf has been a tremendous supplier of LNG.
And that has a domestic reserve.
Indeed, but it's always met its obligations. My sense is that the buyers look at it, but do they think sovereign risk? I don't think so. I think it's something that they could do without. But look, there's noise in the system politically wherever you are. So, it kind of goes with the turf. They're long-term players.
Let me ask you about the future, because you spoke a little bit about where gas sits in terms of coal. The sector globally doesn't seem to have been able to convince the world that it should be the great transition fuel. Do you think that's going to change? I think
it has to change, and it will change. I think the industry narrative has never been as strong as it needs to be. We're seeing new energy rightly establishing itself as the future, many decades from now on a long-term basis in a low-carbon economy. What really matters is not the end point or where we are today, it's how we get from one to the other. And that so-called energy transition is all important. And it's important for our industry to recognise that the natural partner for renewables, principally solar and wind, is gas. and principally within gas, it's LNG. And as it's behooving on this industry to make sure that rhetoric is that narrative is fully understood by governments, and by policymakers, because we are essentially the last hydrocarbon. And many decades from now, when we move to a zero or negative carbon economy, it will, the LNG ship will be, the last thing sailing. But that's a long, long, long way away from where we are today. And
how cheaply can gas be produced? I mean, your plant in Louisiana that you're building, for example.
We can produce gas very cheaply. I mean, gas trades at on the Henry Hub at 2 and change on any given day. But we have this huge gift of associated gas coming out of the Permian Basin, 19 BCF a day, on current estimates of associated gas. So what that means is the gas has to be produced if the oil is to be produced. Demand for oil continues to grow.
And that's 1%. Different in Australia, though, because the oil's not there with the gas in many places.
Correct. So associated gas and non-associated gas are very different things. But in the US, we have to produce that gas. And that gas will get to market at whatever price it can clear at in order to allow the oil to be produced. We see that as a huge opportunity for the industry in America. 20 BCF of new LNG supply, 20 BCF a day of new LNG supply, coupled with about $150 billion worth of pipe, midstream LNG capacity investment. I mean, that's going to fuel a very long-term and very sustainable future for US LNG, which ultimately, and certainly in our view, will outstrip and overtake Qatar and Australia, even in expanded form, or Qatar's expanded form and Australia's brownfield expanded form.
And so finally, coming back to price then, with all this supply coming on, do you see longer term prices coming down but a tightening in the early 20s? Is that what we're saying?
Well, of course it takes a long time from idea to getting a project on stream. It's not a matter of flicking a switch and saying I want the LNG tomorrow. I mean, our project, which we expect to take FID on in 2019, will be on stream in late 23, 24.
Just when things are tight. But
perfect timing for us.
Yeah.
But you have to think about the lead time of these projects. It's important to understand, and to be able to look forward to where, the sinks are in demand and, how demand matches up with supply. But, we will be contributing to a large growth in this industry, a large, healthy, long-term, sustainable growth for the LNG industry for the foreseeable future, which is why you've got so many people, chasing it in all of its forms. It's a very healthy, very long-term and very robust business.
Martin Houston, so great to get your insights. Thank you, sir.
My pleasure.